They say history repeats itself, and that's what Laszlo Birinyi counts on as he analyzes the stock market. Looking at history and psychology instead of fundamentals, he has been able to get the markets right for the past few years, including calling the low this year in March, and also being one of the first money managers to advise buying U.S. stocks before they bottomed 2 years ago. He's got a great track record. Now, according to Birinyi, the current rally echoes the bull market of the 1980s, and those numbers are the chart of the day on the Bloomberg terminal. Laszlo Birinyi is the president and founder of Birinyi Associates. He joins us now. Laszlo, good to have you here on Street Smart. Talk us through, again, the similarities that you're seeing from the 1980s into what you're seeing today.
Well, it's not just the 1980s. Our thesis has been that when you have a market that starts off as strongly as this one did, which parallels previous markets such as 1982 and 1990, those markets will tend to be protracted in length and have significant gains. In long, protracted bull markets, you have four somewhat identifiable phases. First, the market takes off, and then there's this reluctance and consolidation where there's a battle between the bulls and the bears. And then you have the third phase, which we think you've just entered, where people start to realize that the market's not coming back, it's not going to give you a second chance, and that maybe it's time to get on board and participate. And I think that's where we are now. We've gone through somewhat of a correction in the last month, and now we've had this great start to the new month. I think people are coming across and becoming aware that a lot of the negative issues are not quite as foreboding as they seemed to be a little while ago.
But Laszlo, if you look at GDP and unemployment, they're way behind where they were in the 1980s. Aren't you worried about that impact on the equity trade?
No, because the market's not. What I look at is what is really going on within the market. When I see stocks like Caterpillar doing what it's doing and some of the economic sensitive stocks, and I look at those stocks which are leaders in this market, that tells me that the market's put that behind it. The market, we forget the market's supposed to be a discounting mechanism, and as I've often said, the negative case, the concerns, the fears are always more articulate and compelling because we see them. What we don't see is what is the market looking at. Why, for example, about 3 or 4 weeks ago, was a huge trading in Nike calls. Well, the market was saying the earnings were going to be pretty good, and they were, and the stock's up 10%. So as an old trader, I'm more interested in what's happening at the tables, what's happening in the market, and not what the kibitzers and the non-participants are actually doing or saying.
Hey, Laszlo, as far as time periods, I mean, you're looking at the comparison is 82 to 87, right? A 5-year rally where the market more than tripled. We've seen the market already double in the last 2 years, or a little bit longer, 28 months. Do you think that this bull market could be shorter? Could we reach that fourth phase more quickly in this market?
We could, but right now, again, our thesis is you dance with who brung you, and this has been working. Matt, 80% of the market, the gains in significant bull markets are made in the first and last quartile. In the last quartile of the 82 bull market, we went up well over 80%. So, we think there's still more to come. You still haven't gotten to the point where people are really positive. We still haven't gotten to the point, as I like to tell people, where my phone doesn't stop ringing. We read so many negative stories, and I'm waiting for when we see a positive story on the cover of Bloomberg Business Week, and then I'll start to worry a little bit. But still, we keep emphasizing the fact that the glass is half empty, and there's a deficit, and so on and so forth. But again, if you look at what's going on in the market, that's my guru.
Well, I've got Bloomberg Business Week here, Laszlo, and that's not on the cover yet, as you say. So if you're so upbeat here and you expect the market to go higher, where are you buying right now? How actively are you buying, and where are you buying? Just got about a minute here.
We've tried to be very consistent, and all year we've told your colleagues, I think even going back to last fall, there's 5 stocks that we think are core. We start off with Prudhoe Bay, which gives you energy and dividends. We have Cummins Engine, which is economic sensitive. We have Ralph Lauren, which tells the consumer is not dead. We have Priceline, which has been a real great momentum stock, although it's high priced. And then we have Hermes, the French luxury manufacturer and store. Those are 5 good stocks. We want to pick stocks and stay away from the idea of themes. As you saw today with the retailers, if you bought the theme, it didn't work. If you bought the individual stocks, you could have been doing very, very well.
So forget the macro, but definitely focus on the micro. Sounds like what you're doing. Laszlo, thank you so much. Laszlo Birinyi joining us.